Crypto is a very immature market. And that's what a lot of people compare crypto to the stock market. Say, well, the stock market doesn't have drawdowns like this. Well, the stock market is a mature market. Cryptocurrency is based on blockchain technology. The technology of blockchain is what makes everything so secure. We're not investing in Bitcoin or the currency. We're investing in that technology that underlies it.
All right, guys, welcome to Financial Freestyle here on Yahoo Finance. I'm your boy, Raw Smack. Now, look, guys, whether you're a professional on Wall Street, a retail investor, or someone that's just looking to change their overall financial situation, look, guys, there's always a first step you got to take, and look no further, because I'm speaking to some of the most influential people in finance and learning about their path to economic prosperity. And today's no different, guys. I'm sitting here and I'm joined with tech investor, futurist, and crypto expert, Armando Pantoja.
How's it going, man?
My brother, man.
I appreciate you having me.
If y'all don't know, man, this tall guy tycoon, man, this is a person that I have a lot of respect for, a person that, you know, through kind of the COVID life, you just start following people and we develop a relationship online. Then you came out, right, to my Maconomics Wealth Summit in Chicago, and now he's here in New York. And I'm like, bro, we got to talk, bro. Because one thing, right, crypto is back booming, baby. And I will say, outside of Michael Saylor, you one of the people that talk about crypto and one of the biggest advocates. So I think it was only right that we have to have a timely conversation about crypto. But before we even get there, who was Armando? Let the world know, man.
Armando Pantoja, otherwise known as Tall Guy Tycoon. So like I said, is that I've been in crypto for almost 13 years now. Started out as a software engineer. In grad school, I studied cryptology, which is the study of computer encryption.
Wow.
So I stumbled upon crypto doing that.
Wow.
Very early.
Wow.
So when I was, studying, I was like, what is this? This is some crazy stuff, right? So I started getting more and more into it. And I went through the first cycle, 2013, a big exchange crashed. And when that exchange crashed, I gave up on it for 2 years. I was like, nothing's going to happen. It's over.
What year was this?
2013.
Wow.
So 2015 came along and Ethereum came out. And I started getting, because I was interested in the computing side of Ethereum, how that whole system worked. And I got back into it. Then I realized I understand market cycles, how things work, how assets drop, how they come up. And it got me into stocks, got me into crypto, got me into tech investing. I had a software company for a few years. And during that software company, we created a site called ICO Ranker. ICOs in 2017 was a big thing that happened in cryptocurrency. And we were one of the top sites in the world that showed investors what potential cryptos could do well. We got acquired in 2018. From that point on, everybody knew me as a crypto expert. And I've been talking about crypto and crypto-related stocks and also tech stocks since then.
Where do people get it wrong with crypto?
The biggest thing people get wrong with cryptocurrency is that you learn from the wrong people. And what I mean by that is that you'll have your cousin, your uncle, your friend come up to you and say, you got to invest in this one thing. You're like, what is it? What? Don't worry about it. It's going up. And you're like, well, I don't understand what it is. Don't worry about it. It's a new way of money. And then people say, okay, well, I invest in it. And so now they don't understand what they're invested in. So when the drawdown comes, they panic and get out. It was all a scam and they just sell everything they had. So the problem is that most people don't understand what cryptocurrency is based on blockchain technology. The technology of blockchain is what makes everything so secure and so transformative. And the reason why is because blockchain technology has a type of database that is the most secure database that's ever been created. There's almost no way possible to lose data. And 3 is that it can't be tampered with and there's no possibility for third-party interference. Now, there's no technology on earth that can match that. Now, on top of that blockchain that's when the money transfers back and forth or the currencies. But the technology is what makes Bitcoin and all other cryptocurrencies so valuable. It's not we can make a system today that we could transfer money back and forth. PayPal existed before. It's the technology. And when you understand that technology can't be stopped, the government itself could not stop it. We see what's happening right now. They finally had to accept it. And we'll understand that everybody on earth, all organizations, every country will have to accept this way of doing things because of the transformative nature of the blockchain technology. And when you understand that, everything starts to make sense. We're not investing in Bitcoin or the currency. We're investing in that technology that underlies it.
That's powerful. That is powerful, right? And so when you think about where crypto is now, right? Bitcoin, 100K, this, that, and the third, right? What got you, one, interested, and more importantly, what allowed you to have diamond hands in certain names?
After that 2013, I sold everything I had because I thought it was over because an exchange got hacked. And the news said, oh, this is proof that Bitcoin is insecure.
Wow.
And I panicked myself. I didn't have a lot of money back then. So I panicked and sold everything. But 2 years later, I realized that was a mistake. And I got diamond hands because I went through the drawdown. I saw it come back and I started to understand the technology more. And after that, I said, no, it's no way this can fail. It's no way. It's almost impossible. I told people back then, and I say it even today, that in my opinion, cryptocurrency, it's a big difference in the perceived risk of average people in society and the real risk. And when you have that big of a difference, there's an opportunity to make a lot of money because until the perceived risk matches what the actual real risk is, the margins are huge. And that's another thing that I realized earlier about crypto is that when you look at it and you realize how game theory plays into it, how the blockchain technology works, how everybody will be eventually forced to adopt it, then you realize the risk is not low, is very low, but the potential is extremely high. And after that, I became what they call a diamond hand.
Man, listen, one thing I'll say, right, is that when it comes to crypto, I think you say it, right? There's so much noise in the space, right? You go on, you turn on any financial show, you're going to have people saying, oh, this is dumb, right? You had major CEOs of banks saying, if my employees buy this, I'm firing them. Then you find out, oh, actually, right, when you actually peel back the layers, they're actually the largest buyer.
Exactly.
Right. And so I think that there's a huge changing of the guard, and I would love to get your insight because, I talked about, like, okay, over the past, 10 years or so, Bitcoin has had, 8 drawdowns of 50% or more. And each time Bitcoin went to make new highs, right? And now we're in that 8th cycle where it's making new highs, right? And what are you saying to these people, one, about the new changing of the guard? And what I mean by that is like, they're new buyers. They're institutional buyers now,
exactly.
Right? And I think there were a lot of sheep in wolves' clothing where it's like now you look and you're seeing the smart money, the real money, the BlackRocks buying real assets. So like, do you think now that we have larger institutional investors that we will see big drawdowns anymore? Or like kind of what's your view on the overall space now?
So I think the ETFs will stop that because, the last time on average, we were having about 85% drawdown after we got past the retail influx. The early investors would start selling and we have an 85% drawdown. We've had that, I believe, in the last 3 cycles, close to it. I'm not 100% sure, but close to around 85%. I don't think those are going to happen anymore because now we have derivatives. We have ETFs, and those tend to, decrease volatility in markets. You got to remember, crypto is a very immature market. And that's what a lot of people compare crypto to the stock market. Say, well, the stock market doesn't have drawdowns like this. Well, the stock market is a mature market. Derivatives hold that market up. And 2, circuit breakers, government regulation also decreases volatility. You go back to the 1920s, the stock market was just as volatile as crypto. People would lose everything and jump out of buildings. That's how bad it was. But then the government stepped in. They created circuit breakers. They increased the derivatives in the market. And it caused the market to be more stable and less volatile. Now, that will eventually happen to crypto, and it's starting to happen now with all the new ETFs and everything. And I don't think the drawdown will be that much. I believe we'll have a drawdown, but I don't think it's going to be 85% anymore. Yeah. I think that over time, Bitcoin and cryptocurrency in general will become less and less volatile to finally it'll be like 10 to 15% a year.
That's strong. Listen, I think that, when we talk this crypto stuff, I think to some people it is a different language. And I know I try to say, and there are thousands, right? At one point, I remember there were 5,000 different cryptocurrencies. And, what are you looking at when you say, okay, I'm about to put some of my money into a different crypto?
I'm a big believer of utility. Meme coins are fine. People do those all the time. I don't really believe in them 100%. Sometimes I will see an opportunity and I'll buy a meme coin if I think the hype is going to be real. But I don't believe in them long term. I believe in value. It has to be some type of value, some kind of use case, some type of utility. in order for it to have long-term success. And that's really what I look for. Ethereum, Bitcoin, XRP, Near Protocol, a lot of the AI tokens that are coming out now, those all have real utility, and I don't think those will fail long-term. Remember, right now there's 2 million cryptos.
Wow.
2 million cryptos in existence. Remember, me and you can leave this studio today, and we'll have a crypto that's out, and we could be promoting it by midnight tonight. That's how fast you can make a cryptocurrency. So anybody can make one, right? Just like anybody can create a company and start looking for investors. So that doesn't mean the whole market's bad. It just means that you have to be careful.
Facts. So to our viewers, right, who've never bought cryptocurrency, what would you say the steps they need to take to, one, buy it, secure it, and two, what should be their first investments?
So I would always say spend some time and learn what crypto is, learn about the blockchain, because what that does is, first of all, it makes your experience a lot easier and seamless. But two, it also makes you more secure in your investment. If you really don't understand it and you just bought it because your friend said it, you will panic and sell everything.
Yeah.
But if you understand the technology that underlies it, you're less likely to do that. So I always tell people to learn first. Secondly, is go to the first 10 cryptos that's been around for a while. I know that somebody will tell you that this new crypto came out that can go up 1,000 times, but those have high risk.
Yeah.
And a lot of times in cryptocurrency, people don't realize the risk. Risk is very important in finance. You know that. You have to manage risk constantly. And in any type of finance, it could be real estate, it could be stocks, it could be bonds. You have to constantly balance and rebalance risk and manage it constantly. In crypto, you have to do the same thing. The cryptos that come out that you make 1,000 times return on, they have extraordinarily high risk. The cryptos has been around, Bitcoin, XRP, Ethereum, all those other, Solana. Those coins have less risk, but less potential, but also less risk. And you won't lose all of your money. So stick to the ones that have been around for a while, that have been doing well for a while as a first investment.
Which platforms would you recommend them use?
I would say Coinbase.
I always say Coinbase because at the bare minimum, it's going to follow U.S. regulations.
Exactly.
So therefore, it's a function. And then, would you recommend a person buy on Coinbase and keep it on Coinbase, or do you recommend they actually custodian themselves with a ledger?
Now, there's two schools of thought on that. Like a lot of diehard crypto people say, it's a phrase they say, if not your keys, not your crypto, which means if you don't have it on something that you own, it's not yours. Technically, Coinbase does own the crypto that's on the exchange. And if something does happen, it will be like FTX, where they'll lock accounts and then they'll try to figure it out. So you won't have access to it. But I think the risk in that is low. But like I said, the diehard crypto people say do take it off the exchange in case something like that happens.
I was talking to one of my buddy who was, to your point, he got in probably 2013. And to this day, bro, why the hell you ain't tell me? Like I always say that. But he's like, bro, I have more faith in like a Coinbase exchange keeping my stuff secure than it is me keeping hold of a ledger, aka it looks like a USB. But look, guys, we got to take a quick break. And when we come back, man, we're going to have more with Armando. We're going to talk about this current administration and where he sees crypto going. You don't want to miss it. All right, guys, welcome back to Financial Freestyle. Look, guys, got a great guest, man. Today, I'm joined by my dog, tech investor, futurist, and crypto expert, Armando. And look, man, I know you're hearing it, you're seeing it. Crypto is booming, man. And I thought it's only right that the guru, he don't like that word, the expert is here with us. So talk about this new current administration and what does that mean, right? Because I think people are seeing, they having FOMO, a lot of I told you so's, but like now that we're in it, what's this mean for the crypto community?
Regardless of who won the election, this is what I told people prior to the election results, is that there was a lot of uncertainty in the market, right? Nobody knew, even in the stock market, the stocks have been going up too because people didn't know where to put that money. The news told us that Harris was going to win. The betting markets told us that Trump was going to win. And people didn't know what was going to happen. And people were talking about revolution if one wins versus the other. So that causes a lot of uncertainty and anxiety. So people don't know where to put that money. They just hold it out. Yeah. So as soon as, it doesn't matter if Harris would have won, the market still would have done well.
Wow.
Now, Trump won, the market just did even better.
Fair.
And the reason is because we'd probably be at 85,000 with Bitcoin right now, even if Harris was in. But Trump pushed us to that almost 100 because, of course, he's a pro-crypto candidate. He was talking about it for a year. Yeah. He was at the Bitcoin conference.
He gave the keynote at the Bitcoin conference, bro.
So obviously, and people say, oh, no, but obviously, the people are going to see that and they're going to have more faith that he's going to do these things that will make crypto great. Yeah. So obviously, that's going to cause the market to have a lot of faith in what's coming next. That's the reason why we've seen this boom. He hasn't done anything yet. He hasn't been in office. But just the faith in what he's going to do and the confidence in the market is what's causing crypto to go up now. And also, it's another thing is that Trump also promised that he would fire Gary Gensler on day one. Now, he doesn't have the authority to do that, but Gary Gensler saw the writing on the wall, and he's like, I'm not going, he can't fire me. He could pressure the heck out of me and make my life hell. So no, I'm not going to, he didn't want to do that. So he just went ahead and just said he's leaving on January 20th. That caused XRP to go up. XRP is a crypto that's been held down for 7 years by the government. And what I believe to be frivolous lawsuits, I think they were just like picking on XRP. Now, the reason why this is the reason why I talk a lot about XRP. People say, "Why you talk about that coin is dead or whatever?" Because what happened back in 2000, I think it was 2016, 17, is that the SEC went after XRP. Now, the reason why they went after XRP wasn't because it was a bad coin. At the time, XRP was number 2 on the per market cap. They went after
meaning
XRP.
They were over Ethereum, which is insane.
Yeah, they were. And that's when they decided to go after him. So they looked at Bitcoin and they said, well, we can't go, who are we going to go after? We don't know who created Bitcoin. There's no CEO. There's no corporate structure. There's nobody we can send a Wells notice to. All right, let's look. Ethereum. Well, who are we going to send it to there? There's nobody to send it to. Well, XRP. It's in the US. They got a CEO. They got a corporate structure. They got a mailing address. That's what they know traditionally to go after. So if they want to go after the crypto industry, they go after the only one that has the same structures they've been dealing with stocks and everything. So they went after XRP. And that's really what I believe the only reason they went after XRP, because it was just easier. And they wanted to go after the cryptocurrency industry. So XRP paid the price for the entire industry over these last 7 years. But now that Gary Gensler's gone, they're probably not going to follow through with those actions against XRP. And that's why we've seen XRP rise so quickly in the last couple of weeks.
So let's actually define what XRP is, because every different crypto has a different use case. What is XRP for the viewers?
Bitcoin is more like a store of value. Ethereum is a worldwide computer that you can create smart contracts, NFTs, and stuff like that on. You can actually create other cryptocurrencies on top of the Ethereum blockchain. That's what a lot of the coins like Shiba, INU, a lot of these coins are built on top of Ethereum. So XRP is just a different use case. It's built more for banks and money transfers and remittance. So if I want to send money across the country, across the world, XRP was built as the banker's coin. Right. So it's built a little bit different. So it has all the standards and regulations already pre-built in that bankers can they can use it and integrate into their system. So and to be honest, early on I didn't like XRP because it was they can reverse transactions supposedly and all these things.
Do you define XRP as centralized?
It's like in the middle. It's sort of decentralized, but it is centralized in a way. But that's the reason why I didn't like it, because I was an old school cryptocurrency. I remember when it first started getting popular, I didn't like it, and I was at a conference one time, and I was I hate XRP, and going around, and I talked to a banker that was at a cryptocurrency conference, and he was like he's like, I don't understand Bitcoin. Who do I call if something happens? And I'm like, well, it's nobody to call. I'm a pure technologist. And what do you mean you don't have to call it? And he's like, well, is there a company that I can look up? And I'm like, no. And then it hit me that the old school bankers will never trust 100% something like Bitcoin or Ethereum because there's nobody you can call, no company to look up. That's what they're used to. So XRP would fit right into that world. And then it hit me that XRP could do extraordinarily well in that situation. Then I changed over to becoming pro XRP.
That's brilliant, man. What's your views on Dogecoin, right? I think a lot of the stuff when it comes to this new changing of the guard, we're looking at things and you see Elon Musk probably being the most vocal person when it comes to Dogecoin. And now you have a new government, Department of Government what I forget what it's called, but never mind. It's called Doge. The acronym is Doge. So kind of what's your view? I don't really even know like the use case of Doge other than it started as a meme, but I think they're developing now to have more of a use case. But what's your view on it?
So Dogecoin was started even before meme coins were defined. There was no such category as meme coins back then. So Dogecoin started as a joke.
Yeah.
And and it was called in those days, early days, Dogecoin, Dog-E. That's the way it was. And then what happened is it started, it was in the early days. It was built on its own blockchain. It started to take over, do very well. Then the founders or the stakeholders start changing it. They say, oh, get rid of the dog, just call it Doge. And they quickly shifted over to like trying to make it more, real. But the thing about any cryptocurrency is that it can, if somebody could find a use case for Doge, and remember, it's a big community. A lot of people love it. It can do well, right? But I don't think they found a use case yet other than being a meme. And it always spikes up during a Bitcoin or crypto bull run. And it probably will this time too, because as retail investors come back in, probably after 100,000. Also, it's another thing called the Thanksgiving effect that normally causes retail to come in. Everybody who made money in crypto so far goes home, and what do? They talk about all the gains.
Yep. Right?
So then everybody's like, what do I buy now? Well, buy Dogecoin. Then people go after Thanksgiving. We normally see a average of a 10.24 return on cryptocurrency after Thanksgiving specifically because of that. It's an average over the last 14 years. It's been about 10, 11%. So I think Dogecoin is going to do well after that. And Dogecoin could find a use case because any currency on earth, any material, if you have found enough people that have a demand for it, then it has a use case. So we'll see what Elon does with it. So it has potential, but it still has some risk as well.
So earlier you mentioned, right, some of the names you like, right? Then you talked about some AI coins. Any insight there?
There's one called ASI. It's under the symbol FET. So what ASI was, there was several big cryptocurrency AI tokens out there. It was Fetch, it was Singularity Net, and it was Ocean Protocol. Those were the three biggest for a while. So what it did is it converged these two under one coin called ASI, artificial super intelligence. So now, what they're going to do is they're going to try to tokenize AI models. And remember, it's similar to this, right? Is that AI, I think AI is going to change a lot of our worlds over the next couple of years, 3 years. It's going to, over a longer period, it's going to be a lot more change. But I think there's going to be significant impact over the next 3 years. And one is for example, a call center. Right, is that AI is very close to just being able to replace all people in a call center. But people will find other jobs, probably better jobs. But how do we democratize that, right? So if a call center is run by AI, all it's going to do is just make the rich richer. So what ASI is trying to do is tokenize AI models. For example, if you have a model that runs an entire call center, right? It makes all the calls, it does all the sales or whatever. Now you can have that as an AI model. And we can purchase a piece of that AI model. And every time the AI model gets, funds in from contracts, whatever, people that pay this AI model to answer calls, people that own the tokens can receive payouts for that. So I can own a part of this model or this model that maybe predicts sports or this model that runs call centers or almost like a real estate investment trust, but for artificial intelligences. I don't know the plural of that. Is artificial intelligence? I don't know. But you can own parts of these artificial intelligence models, and that's how you can make money, almost like investing in a company. So that makes sure that AI is democratized, that it's fair, and everybody receives an equal share of the profits that come from these.
Well, people, like I promised you, you was going to get a lot of gems, a lot of game. That's it for this episode of Financial Freestyle, man. I really want to thank you guys for joining. But I really want to thank my dog Armando for coming because I think that right now when it comes to the overall crypto world, it is on fire. And I think that a lot of people have FOMO, but I think it's very important to understand the history of it and why the underlying technology, AKA blockchain, is going to be here for the future. But guys, make sure you come back next week for a new episode of Financial Freestyle here on Yahoo Finance.
This content was not intended to be financial advice and should not be used as a substitute for professional financial services.